Welcome back to the channel. 2026 tax brackets are out. What does that mean to me? What does that mean to you? Well, first let's address a misconception. A lot of people think that, maybe they're single and they make $52,000, which will put them in that 22% tax bracket. A lot of people just make an assumption that all their money is taxed at 22%. That is actually not true. So the way it works is the first $12,400 you make if you're single, or $24,800 if you're married, is taxed. Anything under that, taxed at 10%. Anything between the $12,400 and the next bracket up, $50,400, that's going to be taxed at 12%. So your effective tax rate would technically probably be somewhere between 10 and 12, probably closer to 11, almost 12, because there's a bigger disparity there. But you don't start getting taxed 12% until you get there. So let's kind of do a little forecasting here. So let's say somebody makes $15 an hour. They work full time, so that's 2,080 hours. So if you take the 2,080 hours times the $15 an hour, you get $31,200. So that's their total annual income at $15 an hour. So we start working through this, and the first $12,400, like I said, taxed at 10%. So we're going to give a 10% tax, and that's going to be, well, let's go ahead and map all these out. We know there's going to be more, so let's map the 12%, and then we'll map out the 22%. So we know those are the tax brackets we're going to see. So we start taking $31,200, and we subtract the $12,400 because we know that's the first one. So that gives us $18,800 in this tax at 12%. And I'm just noticing that we're going to be below the 22% tax bracket. So we won't need that 22% tax bracket. So let's go ahead and get rid of that. Let's add the $18,800 here for the 12% that we know we're going to have. And let's start, let's kind of do some math here. So the first one we'll do, we'll take 10% of $12,400. And that will get us 1,240. We'll do the 12% of the 1,880. That gets us 2,256. Add all that together, 3,496. That's the total tax that somebody's going to have to pay here. So that's the total income tax out of that wage. So let me get this all caught up here. But you definitely see there's basically two tax brackets that $31,200 covers through. The first $12,400 is taxed at 10%, meaning $1,240 of tax. The second is $18,800. You see the $31,200 minus the $1,240. That gives you $18,800. What's left? Times 12%, and that gets you $2,256 for a total of $3,496. Now we take the gross, and we take that, and we'll subtract the taxes, and we'll get our net. How much money this person's actually pulling down after taxes, $27,704. So you kind of see through that process that we pay a ton of taxes. Yeah, so I wish it was always straightforward like that, but there's standard deductions. There's people who can put stuff in their 401ks. There's all kinds of ways to tax shelter, and we'll talk about that a little more. But let's just run a realistic something I want you to think about going forward is, let's think about, what does that expense actually cost for us? So we think about, maybe we want to take our family out for a meal. Let's just say we want to maybe take them to a fast food place, get a $7 meal deal. So we know that, 7 times 4, because there's 4 people in the family, that's going to get us $28 worth of food. Now, I live in an area where our tax is high, so I pay 10% tax on pretty much anything here. So I guess we'll first start here with the $28 meal, and we'll add the tax to it. So 28 times the 10%, and really I guess it should be 1.1, but we'll do, so you can see it all separately. The tax I'm going to pay is $2.80 on a $28 meal. And then I'm going to add those two together. My meal would be $30.80. Most people think that that's what that meal actually cost me, is $30.80. And that's what I'm going to pay that person at the drive-thru window. I'm going to give them $30.80, and that's what it's going to cost me. So is that really truly what it cost? And the answer to that question is no. It actually costs a lot more than that. What I'm not factoring in is I'm not factoring in the fact that my money has already been taxed, meaning my $15 an hour has already been taxed at 12%. So what I'm paying, what seems like $30.80, I've already paid tax on that money. So I need to put that money back in here in order to make this accurate. So we take the 12%, and that's $3, some change here. Round that through. Now the new cost is $34.50, right? You see that? You see what I did there, right? So I've taken the original $28 meal, did the 10% tax, got me $30.80, added my 12% income tax back to it, and now that meal cost me $34.96. But now I want to really, really think about what this cost me. So a lot of times we think about things in terms of dollars, right? What we're really missing out on is, what does something cost of our time? Because time is something I can't buy, I can't get back. Once it's gone, right? So maybe we think about this from a little different perspective. Maybe we take that $34.50 meal, and now we're going to do a little math, and we're going to see we made $15 an hour. So let's just take $34.50 divided by 15. 2.3 hours of our life for that meal. Now, 2.3 hours is really like what, 5, almost 6% of our work week. So maybe that's not that big of a deal in the grand scheme of things. But what if we think about this on a little bigger scale? What if we think about taking the family out for a more expensive meal? Maybe we're going to celebrate an anniversary. Maybe we're going to buy a gift for somebody. Maybe we're going to do something that costs a little more money than the $28 meal deal. Again, that was a one-time $28 meal that ended up costing us $34 in our tax bracket. But now we're going to look at $100. And we're going to do the same formula here. You see 10%. You see that we're going to leave, a total here, $110 with the taxes. Oh, but we got a tip. So let's just tip on the original $100, not the $110. So if we leave a standard, 20% tax, 20% tip, that's going to get us 130. So 20 plus 110 is 130. Now we're going to give our 12% tax on that 130, because the tax doesn't differentiate between if it's a tip or not a tip. It's going to be the entire bill. And that's going to get us down to 130 times the 12. That's a $15.60 tax. So our total now for the cost is $145.60. So the $145.60 is what it would cost us to celebrate a anniversary, take the family out for a $100 meal. And unfortunately, in today's world, it feels like more and more things are costing $100 for a family of 4 to even go out to a casual sit-down place. And just for good measure, let's take that 145 and divide it by the $15 an hour. We're now at 9.70 hours. So if I look at that in strict terms of how much time, 9.7 hours is basically a fourth of my work week. So it took me a fourth of the week to celebrate that 1-2 hour thing. Not saying we shouldn't celebrate. We absolutely should celebrate. Just trying to give you perspective on before you make those big purchases or do that extra thing. So now let's look at this slightly different, because I always hear, people who make a lot more money, maybe they're billionaires, multimillionaires, whatever. Maybe they should pay their own way, right? So I just want to show you the impacts of maybe somebody in a bigger tax bracket, a higher tax bracket, what that looks like what happens when we add their tax bracket back into the cost of these goods. So we'll use the same scenario. This time maybe we'll take somebody maybe not at the highest tax bracket. Maybe we'll take somebody at, let's do the 35% tax bracket. So that's somebody who's making $256,000 a year, or a couple making over $500,000, which is obviously a ton of money for most of us, right? So, but let's take that example, and let's do the $28 meal deal. We'll do the 10% tax, so that's all the same. We know it's $2.80 earlier. That gets us all this up front is the same. They're paying the same local tax, so they're at $30.80, just like we were in that other bracket. But now we're going to do the 35% tax bracket back to us. And now we're looking at $10.79. So we add all that together, and that's a $41 meal. So you see the difference right there, plain as day. They're paying more. But again, that's the $28 meal deal that they're paying more money on. But we pull this through, we see the difference. It's $7. So they're paying $7.08 more than the people who are in that 12% tax bracket. So we carry this out. Let's do the $100 one. We'll still do the 10%. We'll do the tip, still the same. So they're paying $130, just as the same bracket as before. Now we add back that 35%, so it's a $45.50. So that brings our total to $175.50. We look at the difference of what that looks like across the board. They paid $29.90 difference in just the same experience, the same meal, the same celebration that the other tax bracket has paid. So hopefully you get a better understanding of how the tax brackets work. Hopefully I've been able to change your mind about it's more than just the tax you pay, it's the tax you've already paid, which in terms is time and money and energy for that purchase. If you get anything out of this, like and subscribe. Appreciate you. Thank you.